Hello and welcome to IPO Central. My guest today is from Purple Style Labs. It's a uh, it runs a store chain which under the name Pernia's pop-up shop, and it's one of the largest and fastest growing multi-brand luxury with omni-channel fashion platform. The IPO for this company is opening on August 31st and closes on September 2nd. A price band of 546 to 575 is a fresh issue of 680 crores. And joining me now is Abhishek Agarwal, who is the whole-time director and CEO of the company. Abhishek, thank you very much for joining us. Give us a sense of the business first. I understand it's a multi-brand, omni-channel fashion platform. How you have grown over a period of time, and what kind of brands that you manage.
Sure. Thank you for having me here. So we had bought Pernia's pop-up shop in February 2018. Prior to that, it was an online-only platform. Post the acquisition, we started opening experience centers, as we call our stores. And our first experience center was opened in Juhu in 2018 itself. But over the 2 years course of acquisition, we were very quickly able to scale to 8 stores, and this included a store on Grosvenor Street, Mayfair, London as well. Post that, from since 2022, we started realizing that we need larger stores as opposed to more stores. So we opened our first large format experience center in Delhi. And since then, we have been doing the same at all the locations. So we shifted to a large store in Hyderabad as well in the year 23. We were able to successfully cross 500 crore revenue in March 24. And then in the last fiscal year, we opened 4 large experience centers, 2 in Bombay. One of them is the Ismail building on Flora Fountain, as people know. So that opened July last year. And we just did a similar size store on Linking Road, Bandra as well. And apart from this, we have also opened our first international store in US in New York, on New York Madison Avenue. That has also been operational since March this year. And the business model is pretty simple. We sell all the top designers of the country. The platform currently houses 1100 plus brands. The average order value for the business was 75,000 in FY26, and we had collectively done 720 crore of gross sales in the last fiscal year. We work with all the top designers, Seema Gujral, Anushri Reddy, Amit Agarwal. I mean, you name the brand, it would have on the platform. So for an average customer looking to buy something on the luxury space from Indian designers, and as you would know, most heavy shopping typically happens for wedding wear and occasion wear. So that forms a decent part of our business. And yeah, from these large format stores, the customers get an ability to browse almost 5,000 pieces, which gives them a very wholesome experience of making wiser decisions in what they want to buy, and at a very high average order value as well, for good for us.
Hmm. Uh, Give me a sense of the kind of margins that you get in this format. Given the fact that these are luxury brands, the margins should have been higher, but I can see that EBITDA margins are slightly lower, sub 10%.
So let's start with the gross margin first. So despite being a platform, we have been making like our FY25 margin was 42%. Prior to that, it was 41%. So being a pure platform, we are able to get a high gross margin. Now, as far as the EBITDA margins are concerned, see, we have always been focused on growth for the last 7, 8 years since acquiring the platform. So if you see just from the year 2021 to 25, 26, you will notice that the platform has grown almost 11 to 12 times with almost a 60% plus CAGR. So it's a high growth industry. It's growing at almost 25%. I mean, the luxury space within the wedding occasion wear. And we have been increasing our market share, which is delivering a 60% plus CAGR. So from our perspective, we are currently more focused on bringing growth as opposed to worrying about, generating very high profitability from this 42% margin.
Hmm, and what would be the the big cost items for you, because gross margins are of, more than 40%, but EBITDA margin shrinks a lot. So where does the big cost come in for you?
So currently, as I said, we have been focusing on building the head office. We have been building the sales side team. So salary forms part of the cost structure, which is high. On the marketing side, we have been reducing the cost. So you will see a sharp jump between 23 to 25 on the EBITDA because we shrunk the marketing from a 54 crore base to a 30 crore base, bringing it now below 5% in the last fiscal year. So from our lens, we have already gone towards eliminating the long tail, reduce the marketing. Site has a lot of traffic. So yeah, so the EBITDA has increased. But I think going forward, because beyond a point, the head office cost doesn't increase. So you can see the operating leverage at some point coming into play and leading to higher margin.
You're raising 680 crores, which is which is in fresh equity. What is it going to be used for?
So, like we said, we are a growth focused company. The two important levers for growth come from the payment of lease liabilities of our stores and marketing, which is typically used for running the online platform. So, if you see the significant portion, which is about 370 crores in total, is being used for lease liabilities. And on top of it, another 140 crores about is being used for marketing expenses.
Hmm. Give us a sense of the kind of order flows which you have. Which segment do you cater the most? Is it the women wear or is it the men wear? And what kind of margins do you see or gross margin that you see in these? And when you say that you do have, it's an omni channel. Give us a split between offline and online.
So we don't look at online and offline separately. We typically look for a signal geography. Like for example, US was all online till the New York store opened, and we used to do an average of about 100 crore gross sales over the last 3 to 4 years. So from our perspective, we are more keen on how much the US grows collectively now with the New York store, as opposed to what the split is. Now the margin structure for us are not different for different streams of businesses. We work at a single markdowns with a single designer, irrespective of the sales channel it sells from. And in terms of the growth expectation from here, the idea is because we are going deeper into our key luxury markets as opposed to looking at widening our distribution, because namely Delhi, Mumbai, US, these are very large markets where we can constantly find out more revenues for changing gear. So if you take Mumbai just as an example, we used to do about 120 crore gross sales in the last two FIs from Juhu, Bandra, Kalagoda location. But we are able to now shift to two large stores in Mumbai. And the last year, which is FY26, had 205 crore of sales despite running Kalagoda only for 9 months. And Linking Road just opened towards March 26.
Hmm. Since you're listing on the stock exchanges, the investors would also like to see a path to profitability as well. What is your timeline for that path to profitability?
So, as I said, 26 was a big year of expansion. We opened four large experience centers in the last year, two in Mumbai, one South Ex in Delhi, and one in New York. So, 27 is the first full year run. And we are not fixated about the timeline so much because if you can understand, the cost structure of the business is pretty much fixed. Like if I'm looking to increase marketing only by a certain percentage, like we have put in the objects, and the lease liabilities are also fixed. So there is an inflection point at which the company becomes profitable. Since we always have more headroom to growth when we reach that stage, and there is healthy margins in the business, it really won't matter for us at which point in future that profitability swings.
But the street would like to see that that
No,
point in future as well.
absolutely. But as I said, we have been a high growth company, and there is still a lot of headroom to grow, given that this industry itself is growing at 25% CAGR. And we are not bringing growth from diversity. So basically, our point of view is that when you're operating in a very narrowed band, where you're working with limited designers, limited geographies, and limited set of customers, you have more throughput ability generation as opposed to when you're completely wandering in uncharted territories.
Hmm. You know, one thing which stood out for me is that while your average order value has gone up over the last few years, the average the order count has fallen in the last 2 years. Why is that? Have you been concentrating on high value products? Have you moved out of the low base products as well?
Yeah, precisely. So if you look at the strategy section in the prospectus, we have highly put stress on this fact that we realized after crossing 500 crore revenue in March 24 that we were selling a lot of brands on the long tail, typically in the 5 to 15,000 price point product. So you can see that the number of brands listed on the websites were reduced from 1900 to 1100 over the last 2 years. The marketing spend was dropped from 54 crore to 30 crore. So we have precisely done exactly that. And the data supporting this decision, obviously, you can see a jump on the average order value with sales going up. But in 24, when we had serviced about 92,000 plus customers, 50,000 customers had contributed almost 90% of the sales. So that was the reason why we took that decision that, as opposed to trying to diversify in all geographies, all categories, and all price points, we reduce the pressure from the below 35K business. And we have given a category table specifically in the prospectus showing women's wear 0 to 35K, 35K to 1 lakh, and 1 lakh plus, and menswear. So if you see last 4 years journey, the 1 lakh plus has grown from 26% to 43%, and menswear has grown from 10 to almost now touching 20%. So the focus category is going more and more on the higher side and less on the lower side, and that's why you see a very sharp swing over the last 2 years on average order value. And even on the customer contribution, our average customer contribution has grown from 67,000 to 1 lakh 8,000 now in the last fiscal year.
Abhishek, how do you compare yourself to some of the Indian luxury brands or high-end branded stores which are there? Because the street would be comparing you with some benchmarks in India. Uh, do you see any of them in your category where you have the kind of sales that you do?
So we don't have any listed peers, obviously. But in the industry overview section, some of the international brand sales in India, some of the Indian brand sales in India have been highlighted for comparison. So if you see that table, you can clearly see we are having a very significant high growth over the last 5 years versus other peers. Obviously, it's an open market; anybody is free to operate. But what needs to be considered is that one, we are a platform; we are not a solo brand, and we also have been growing aggressively.
What is the kind of revenue share or commissions that you give to the designers who are portraying their products on your platform?
So it's the other way around. Usually we sell branded designers, so which means the MRP is decided by them, and we work on a price parity model. So which means whether you buy the product from us or you buy from the brands directly, their website, our website, price is always gonna be same. So the trading margin of about 42% that you see over the last few years in the company, that basically is my realized markdown on financials. So we
And
work on a markdown basis and not a markup.
okay, and how do you look at the entire issue of with respect to moving from here? Is there a revenue seasonality that you also see in your business?
I think in India, festive is more seasonal, but weddings, because start almost like October, November, and go on all the way till July, and a lot of shopping for on the luxury side, especially happens 3 months in advance. So I guess 9 months year business cannot be called seasonal. Also, we operate in the luxury space. Wedding occasion wear is a large portion for us, but that doesn't take away from the fact that we sell all other categories also, which are not necessarily wedding. I mean, occasion wear has been becoming more prominent as you see as India is growing, and there are more richer families, who are willing to spend money on more occasions and not necessarily wait for a wedding to happen in the family. That's why you see people celebrating now 25th, 35th as well, in anniversaries more often.
There's an exceptional item that is there with respect to ESOP counting on your in your P&L for last 2 years. How much of more exceptional item would be there? Means is it spread over next few years or is it over?
So we had through the ESOP plan issued a total of equivalent of 50 lakh ESOP options, which at the last price when it was granted comes to about 250 crores odd. Out of which between 25 and 26 collectively, I think almost close to 240 crores have been expensed out. So to answer your question, it's almost done.
And what is the kind of growth that you are looking at your business now from a revenue point of view? Because you have pivoted from low-end, low-price products to a high-end, high luxury products. So, is it fair to say that the growth would be in the range of high teens or high mid 20s?
So I taking example from the history. So over the last 5 years, when the market was growing at about 20-25% in this luxury category of wedding and occasion wear, we have delivered a 60% CAGR. And from here, as per the industry report on our prospectus, the market is expected to grow at a 25% CAGR over the next 5 years as well. So I think so long as we're able to maintain the market share, what you're saying should be reasonable.
There's also one more item which is there in your risk item, which is a termination notice for the Pernia's license, which has been mentioned here, which you are disputing as well. What happens to that? What was the agreement, and where does it stand now?
So just to clarify, I mean, the agreements are there on our website, they're publicly available. Pernia's pop-up shop as a trademark, as a brand, was bought by us through an asset purchase agreement. So all the intellectual property rights around it is owned by Purple Style Labs Limited, which is the company going public. And the license agreement that you're talking about is just an additional layer of Pernia's trademark license too, but that's an irrevocable and a perpetual license. So all these documents are available, but as far as Pernia's pop-up shop is concerned, the trademark, the goodwill, the IPR rights around it are all owned by Purple Style Labs Limited. It's not licensed.
Hmm. Is there a new segment that you want to enter in this? Because you're looking at women wear, which is around 74%, 76 to 78% of your GMV, which is there. Men's, kids, are these some of the areas that you're looking as well?
So men has worked very well for us in the last few years. If you see, the share of menswear has grown from 23 at about 10% to almost touching 20% now. We started with real jewelry in 24, which is still picking up from these large format experience centers. We try and place them in every store. I think since we are currently operating mostly with Indian designers, we have access to all the products that Indian designers make. So as of now, the women's wear, you are looking at it collectively, but the women's wear in below 35K, 35 to 1 and 1 lakh plus are very different products, like they are categories in itself. So I think we are currently having enough headroom in these categories. They are also growing at a very high CAGR. But yeah, if real jewelry turns out to be a success, then you can see that market share growing as well.
How do you look at expansion from here on? You have 12 stores. You are raising funds for your lease rentals there. For how long the funds that you are raising will be sufficient? And for new stores, will you be using your internal accruals, or will you come to the market again?
So we already have done a significant expansion last year. So the lease attribution which have been put is mostly towards the large format experience centers over the next 3 years. And from internal accruals, we should be generating enough cash in the company to deploy towards future growth. But having said that, I think the expansion that we have in hand, which is already done, is creating enough headroom for this year and the subsequent year. Since we are going to go deeper in key luxury markets, and all of these have happened this year, so I think future expansion is something that we can look at in future, honestly. But I think we are good. Expansive expansion done in the last fiscal itself.
Point noted. Abhishek, thank you very much for joining us today. Your IPO is opening on August 31st. It closes on 2nd. Price between 546 to 575. 680 crores of fresh issue that gives the company a value of 4,600 crores at the upper end of the price band. Thank you for joining us today on ET Now.
Thank you so much. Thank you so much for having me here. Thank you.